Okay, morning guys. Final session before the Easter shutdown. So this will be the final briefing until Tuesday next week, as we take the 4-day Easter holiday weekend. So let's just get this final session of the week underway, and obviously no other place to start than showing you this chart to begin with, which is the euro dollar. And indeed, you can actually look at any pair really, and you're going to get the same kind of story, which is an accelerated pop to the upside just into the US close last night. We had a lot of dollar weakness here, and actually, as you can see on the technicals, just shifting higher up to test the high point that we had back on the 7th. So big move higher. Sorry, big move higher for euro dollar. This is dollar weakness driven by Mr. DJT himself. So Donald's been on the wires, interviewed by the Wall Street Journal. Here are the headlines: Trump's weaker dollar dream at odds with strong economy promise. So I mean, it's quite farcical on the one hand, although, well, I don't know, some are giving him the benefit of the doubt, but essentially in one article he pretty much reversed his opinion. These were key election campaign promises. He pretty much reversed about 4 of these in literally about 10 minutes. Quite incredible. One of them then was the lead kind of market moving comment, was definitely, and I'm quoting here, so this was in an interview with the Wall Street Journal, and he said, the US dollar is getting too strong. He couldn't resist adding in a bit of self-congratulations, because he attributed that partially to people having confidence in me. He then added, it's very hard to compete when you have a strong dollar and other currencies are devaluing their currency. The irony of that sentence is hilarious. Obviously blaming others for devaluing their currency when that's precisely what he's doing with that comment, devaluing his own currency. Although I wouldn't say that's a sustainable dollar weakness necessarily. So firstly, obviously the dollar moved sharply across the board. If we just check out some of these other, let me switch back to the charts here, and if we look at some of the other pairs, of course, you know, you've seen the similar pattern. This was just into the US close last night. So here's cable shifting higher, breaking to new highs, up, you know, sustaining that floor at 125. Such a good support through yesterday's session, and then nice strong push up 126 overnight, being the kind of upside barrier before some consolidation. So dollar weakness for sure, off really one of perhaps the only, or the most interesting kind of market move of yesterday's session. So other stuff in this article from the Wall Street Journal that Trump has delivered was, well, if we talk about China, and so Trump said that China are not currency manipulators. Yep, you heard me say that correctly. Trump said China are not currency manipulators. The fact that he's now saying that, I don't know. Either there's 2 schools of thought. Either he's very clever, and I'll explain the reasons behind that comment in a second, or he's a bit of an idiot. I'll leave it up to you to decide which of the 2 he is. Now, he's said that China are not a currency manipulator, having stated that very fact aggressively for the last 12 months, all throughout, of course, the election campaign. You know, he very much key cornerstone of his election campaign was the very promise to brand China a currency manipulator his first day in office, and set about, you know, ripping up the rule book and getting US jobs back into the US, having seen Obama and the previous presidents exporting US jobs to China for the last couple of decades. He's going to reverse all of this. But of course now, you know, another U-turn, another spectacular U-turn. He's now saying they're not a currency manipulator. There's one slight benefit of doubt I'm going to give him here. there is a North Korea angle on this. Just before I talk about that, actually, on the graphic, I just want to show you a graphic looking, and this is quite an interesting chart, looking at the dollar in 2017, and we've definitely had, in the end, dollar weakness. Obviously, this doesn't tell the story. The dollar is stronger since the election, but generally, look, Trump's been saying on January the 17th, Trump says strong dollar is killing us. Then at the end of January, China and Japan devalue whilst we sit there like a bunch of dummies. That's what he said at the end of January. And then yesterday he said the US dollar is too strong, so repeating his kind of comments from end of January. Of course, now he's reversed his stance on China. I would say there's one angle that might explain what his tactic is here. And let me just get to it. And that angle is North Korea. It might be, it just might be, if you do want to give him the benefit of the doubt, and I don't know whether you do or not, his angle might be, well, my relationship with China here is pretty key if my priority is sorting out North Korea. So he might be saying, well, all right, temporarily I will back off my criticism of China on the currency side to garner favor with them so that they can support me in my efforts to neutralize North Korea. Once North Korea is done, right, I can get back to criticizing them for devaluing their own currency. Maybe that is an angle. But that aside, it's still another spectacular U-turn. So he said the dollar's too strong. He said China are not an FX manipulator. Yesterday, he also he said that NATO, well, he had a press conference with the NATO Secretary General, and having basically said NATO is a complete waste of time and we're going to back out of it in his election campaign, he's now saying that NATO is very useful and is absolutely a key part of, you know, global international security. So that's another U-turn. The other big spectacular U-turn from yesterday involves this lady here, Janet Yellen. So what he said yesterday was, I do like a low interest rate policy. I mean, quite unbelievable. He spent the whole of the election campaign heavily criticizing Yellen for having a low interest rate policy. And now he's saying, I do, and this is a direct quote, I do like a low interest rate policy. He also said, because another key part of his campaign was day one in office, you know, I'm going to start the ball rolling. Yellen will not be Fed chair for much longer. And then what did he say yesterday? He'd consider renominating Yellen. So another kind of series of...
He also said that, talking to the Chinese president, he whispered to him, I just want to tell you, Chinese president, we've just bombed Iraq.
What?
And then he had to correct himself, his advisor. So in an interview with Maria Bartiromo yesterday,
he
said, we just bombed Iraq. That's what he said to the Chinese president. And he went, look, someone had to correct him, so it's Syria.
Jesus. All right, so we're just hearing he was in an interview with the Chinese president. When was that? Yes? No.
This was
over the weekend.
With Fox Business yesterday.
Right, so with Fox Business yesterday, he was talking about his conversations with the Chinese president over the weekend, and apparently he whispered during a kind of press conference or an interview, not press conference, during a kind of interview, he whispered to the Chinese president, "Oi, we've just bombed Iraq." And then one of Trump's aides had to kind of basically nudge him and say, no, it's not Iraq, it's Syria. So does that fill you with confidence? The fact this guy is wielding the kind of power that he's got, I'm not quite sure. So anyway, look, plenty of U-turns. We should expect this from Trump. He's already U-turned on a few things. And more importantly, he's also failed to deliver on policy. And I would say this is the bigger thing for markets, although you haven't really seen much action with regards to equities yet. But look, let's just check what's been going on in some of these. We'll come to equities in a second. Because look, if everybody's now saying, well, Trump isn't going to deliver on his promises of tax cuts, his promises on fiscal spending, his promises on deregulation, his promises on repealing Obamacare, you know, all of this stuff. Certainly Obamacare has failed for now, of course, and we've got serious reservations as to whether he's going to deliver on anything else. So how are markets behaving? And certainly gold, and I'll look at T-notes in a minute, gold is definitely responding as you might expect, with a lot of geopolitical tension ramping higher in the last couple of weeks. We've had Tillerson over in Russia talking to Lavrov yesterday, and indeed he spoke to Putin about Syria. I'd say it was a difficult meeting, but it looks like they perhaps have agreed that they've got common ground, and they both think the priority in Syria is dealing with ISIS. It's just that Russia think that the best way forward on that is to support Assad. The US kind of did reluctantly fall into that camp last year, but of course since the chemical weapon attack, that's now reversed, and essentially the US is saying, look, we don't want Assad, and we definitely don't want ISIS, but at least there's common ground on ISIS, I guess. But look, if Trump's not going to deliver, if we've got raising geopolitical tension, if we've got quite a sharp uptick in French political risk with the rise of Mélenchon over the last couple of weeks, well then, have markets responded in a risk-off manner? And the answer is yes in places, and definitely not in others. So gold up, breaking above that high point we had back in February. This is the daily continuation chart. If we have a look on the weekly chart for gold, then you can see this is the highest point we've traded since the election. If I just draw a line, this line, let me just make this chart slightly bigger. This line at $1,294.50 is quite notable. That was the opening price the week of the election. Obviously, we went higher than that. The initial move higher was off Trump winning and the brief bit of panic. That took gold up to 1338. Then, of course, we reversed, and obviously got major risk on across markets. Of course, gold suffered in the face of that. Let me just delete a couple of these lines. So, gold certainly displaying a risk-off sort of behavior here, and we stride up to the highest levels we've seen in 6 months. Okay, so that certainly makes sense, you would say. I'm certainly supportive of the idea that this move continues, especially with the French election on the horizon, just 10 days away now. Definitely nervousness building on that. So I think 1300 is inevitable, and then it's whether we kind of take that out early straight away on first test, or whether the French election goes on a market positive way. Let's say Macron does make it into the second round, then you might see profit taking on this gold. So we'll see, but certainly gold displaying behavior that you might expect. Let's look at T-notes then, because also on T-notes, if you're looking at the daily chart, you definitely got movements that represent risk off, movements that represent a little bit of nervousness building. So this is T-notes up to the highest levels of the year. Yesterday, big push high, and look at this 2-day move. If you take in Tuesday's push to the upside as well, this is a massive move. Key break of that high from last week, and that kind of payrolls spike high from the 7th of April. We took that out, and we're on up to test the 126 handle this morning. If you look on a weekly chart, again, looking back to where we were when the election took place, T-notes is still way down. Okay, we had a big rally on yields, big sell-off on bond prices, because we thought, just purely listening to what Trump was telling us, we thought Trump didn't like low interest rates. We thought Trump was critical of Yellen's dovishness. And so we started pricing in higher inflation and a steeper Fed interest rate hiking trajectory. It's just what he said yesterday. Oh, I do like a bit of low interest rates. I do like Yellen. I may well re-elect her. That could be quite significant for yields, I think, and bond prices, and certainly technically this is important. So we may well now see T-notes use this break and see momentum continue in the upward direction, especially, as I've said, with the French election on the horizon. So look, bonds and gold displaying behavior that suggests risk off, except when you look at the equity space, you should get a corresponding sell-off for equities. And this is the piece of the jigsaw that hasn't quite yet delivered. We've had various stabs to the downside in recent times. Most notably on this chart, you can see back Here on the 11th, we had a sharp spike lower, but look, it snapped back immediately, all of it, and we'd rallied up into the high for the close. Yesterday, strength in the early part of the session before then, quite a consistent move to the downside through the European day. Then things just calmed down, and we're kind of trading around about that low point from yesterday as I speak. But certainly check out that level, the low of the week so far, 23.33. But if we look on a daily chart here for the S&P, then it's a little bit messy. But we've got a downtrend. It's just so reluctant. It's so difficult. It's to kind of get any sustained moves lower seems to be very hard. But we have been trending lower for 6 weeks. Don't forget that. I know it doesn't feel like it at times, but I would say certainly if we close below Tuesday's low today, that certainly I think confirms this downtrend. Obviously, the key price is the low of March at 23.17, and we have got lower liquidity levels in markets as we go through the Easter weekend, and so if we do break Tuesday's low today, it could open up to be a decent move lower as equities just catch up a little bit with other markets in terms of this nervousness and this kind of slight risk-off vibe that we're seeing when we look at safe haven markets. All right, let's just switch back and talk about some macro stuff. So we've covered Trump in so much that he's called for the fact the dollar's too strong. He's said China actually are not FX manipulators. He said Yellen's amazing and I love low interest rates. And maybe there's an angle on North Korea. So we just talk about North Korea. One thing of note is that North Korea have communicated to journalists that get ready for something big to happen today. Now, on the one hand, that sounds quite scary. On the other hand, what you've just got to realise, well, hang on, there's a US institute first, let me say. There's a US institute that are speculating that they're going to conduct their 6th nuclear test soon. This is the nuclear test site, some satellite photos, and this US institute are saying that this shows evidence that the nuclear site is test ready. All right, that's one thing. But be aware, I think I've lost the article now. This is the 105th, or over this weekend, in fact it's on the 15th of April. It's the anniversary, it's the 105th anniversary of the founding father, I can't remember his name now, the founding father of the current kind of North Korean regime. Every year in the middle of April, to represent and to celebrate this anniversary, they have a show of military strength. So they have a lot of military drills and activities, and this does tend to lead to a lot of international journalists being invited to North Korea to report on their show of strength. So this would be happening anyway, because it is that time of year. It's just that it coincidentally this year happens to also coincide with Trump making serious moves towards dealing with North Korea. So you might say, well, isn't this North Korea retaliating to those threats? But it might not be anything as sinister as that. It might just literally be it is this anniversary. Anyway, apparently something's going to happen today. Whether it's another missile test, I guess that's the most likely, right? So we need to be on the lookout for that for sure. And obviously, well, how successful is the test? They haven't been particularly successful in the past. But I'd say more importantly, what's the response from the US and China? And is there any coordinated messaging on how to deal and respond to it? Okay, so that's something to look out for. All right, a couple of other things then. China, we had some data overnight from China in the shape of their export and import data. Actually, on the face of it, the numbers look pretty amazing. So, for example, exports rose 16.4% in March 2017 compared to March 2016. That was above the expected 4.3%, so huge increase relative to expected. But when you look at this chart here is looking at the month-on-month sort of dollar value of exports. And so yes, we've had a large jump, but mainly it's because February was so bad, and we get such disruption around in quarter one every year. We get a lot of disruption because of the Lunar New Year. If I look on a 5-year chart, you can see that there's nothing untypical about what's going on here. So whilst the figure on the face of it looks huge, 16.4% growth in exports, actually the export chart is definitely displaying its usual annual cyclicality around about the Lunar New Year period in quarter one. Other stuff then that's happening today. Let's talk about something different. Obviously Trump is still very much top of people's lists with regards to risks, as is the French election, of course. But for now, today we're actually going to switch up, and we've got something else to look forward to. And this is really the proper beginning of the US earnings season. So this is quarter one 2017 US earnings. This is, of course, where all the big US corporations by law have to report their performance for each quarter. So looking for just top level stuff like revenue and earnings per share figures. I'm interested in further detail with regards to what are their forecasts for quarter two, what are their forecasts for, and what's their guidance for revenue and profitability throughout 2017. So today it really properly gets underway, this season, which lasts a few weeks. This is where you're going to get all the S&P 500 companies report. But today is bank day, so we've actually got three of the four biggest banks in the US reporting earnings today. Okay, and here's what's to listen out for. So today it's JP Morgan, Citigroup, and Wells Fargo. Three of the big four, Bank of America being the fourth. They're reporting next week, I guess it is. But what are we looking out for? So and actually, before I show you what we're looking out for, check out what's happened to bank share prices so far. Since Trump won the election. This is quite an interesting chart. So this is looking at just the bank index in the US. Okay, see the election, Trump wins, a bank, huge push higher, up through 80, up through 90, big acceleration through the month of November. And of course, this is off the prediction or the expectation, I should say, that Trump's going to deliver on major reversal of regulatory burdens such as Dodd-Frank, and this is going to be phenomenal news for bank profitability. Okay, so bank share prices rally to all-time highs, but ever since then we've been sideways, and look where we're trading right now. Technically we're on the low of the year here, and in fact we made a new low for the year yesterday for bank share prices. And this is now, of course, off the idea, number one, and mainly, that is Trump going to be able to deliver on these promises? His failure with Obamacare has just eroded people's confidence that Trump can get all of his other policies through Congress. So you're getting a little bit of an unwind here in bank share prices as people price out the probability of that deregulation. Let's go back. What are we interested in hearing about from the banks today? So firstly, lending. Obviously banks make money from lending. They pool their deposits and then they lend this out to businesses and individuals. Individuals, obviously mortgages, credit cards, financing deals on car purchases, that kind of stuff. We're also lending it out to businesses by way of just straightforward corporate loans, but also overdraft facilities and the rest of it. Well, commercial and industrial loans, look at this chart down here. What we're actually worried about is that the number of loans being or the amount of money being lent out into the economy is now contracting, and this is a pretty horrible chart when you're just looking at commercial and industrial loans. This is really worrying, I think, from an economic growth perspective looking forward. You need strong credit availability, cheap credit availability to drive economic expansion, and this to me looks like the early signs that credit growth we had middle of 2016 has run out of momentum. So this is quite concerning when you're thinking about economic growth for 2017, 2018. But look, from the bank's perspective, if they're lending less, well, that's negative for revenue. Okay, that's one thing to say. So we want to hear on this. The other thing then, well, what about the Fed's rate hike? Because actually this is good news for banks because it increases their profit margin when it comes to lending money. So here, this is a very long-term chart, which is looking at something called net interest margin. This is the differential between short-term rates and long-term rates. That's the bank's margin. They borrow on the short term from us lot. I say borrow. I was looking at a stat. Citigroup and Bank of America, they pay their depositors an interest rate of 0.01%. So those banks borrow off us consumers. They borrow at the rate of 0.01, and then they lend this money out on the longer term. Okay, so what's the differential between those rates? Well, that's the bank's profit margin, and this differential hit a record all-time ever low, of course, over the last couple of years, down below 3%. Now, look what's happened though in the last 12 months. And certainly in the last 6 months, this has turned back higher, and that's because the yield curve has steepened. And the yield curve has steepened because the Fed have become more hawkish, and indeed they've hiked rates twice in the space of 3 months. And, you know, Trump's been hawkish, and we've got inflation pushing higher. That whole Trumpflation story has really helped banks with regards to the net interest margin increasing. But given what Trump said yesterday, you know, does this put this trend at risk? So actually what Trump said yesterday is definitely bad for banks. So we'll see. The other thing, couple of other things that we might be interested in with regards to banks, you know, how is their investment banking and their capital markets divisions done? We're expecting some pretty punchy growth from the fixed income and commodities desk at Morgan Stanley, but apart from that, I mean, that's more of a reflection of how badly they did last year, I have to say. But otherwise, we're looking at quite weak equity performance from Morgan Stanley and JP Morgan, where we're expecting contraction. Citigroup flat, marginal upside for Bank of America. So we want to hear on this, which is traditionally, when it performs well, such a powerful engine for profitability. This is what bank share prices have been rallying off, the idea that a reversal of Dodd-Frank will allow these divisions within the bank to motor on and produce more revenue. Finally, looking at exposure to subprime debt, and there's been a bit more talk, a bit more focus on this subprime auto space. This is people buying cars on finance. Jamie Dimon, head of JP Morgan, of course, said there's a problem with subprime auto, which we see. But he did say, and he's right, he did say subprime auto is so small relative to the US debt market, it won't make a difference to the whole system. So when you start hearing subprime auto, don't necessarily think that's a similar scenario building that we saw when we had subprime mortgages back in the crisis. But having said that, Wells Fargo, for example, do have $62.3 billion worth of auto financing on their books. So we want to hear about that as well, and how they feel about their exposure to that. So this is bank earnings. This is going to happen between midday through till through till about 1:30 p.m. this afternoon. If you want a bit more info on this, this is a really good site, celeritycorp.com. This is a really good site for earnings previews. So if you want more detail on these bank earnings, go to celeritycorp.com and you can check out the previews they've got for Citigroup and JP Morgan and Wells Fargo. And this is a good resource as we go through the earnings season, as you'll find all these, not just bank previews they do, it's all of the previews. Okay, so check this out. All right, let's just have a quick look at the data calendar for today. So you know, I'd say we've got final readings on inflation, some of which we've already had from Europe. It's just Italy left. Actually, we've just had Italy. But these are final readings. And Let me just check here. The Italian one hasn't come up on my feed yet, but certainly the French ones were in line with expectation, back at 7.45. The Italian ones were in line with expectation. Actually, they just hit the wires. The German ones were in line with expectation. So as normal, these are final prints for March, right? So these aren't going to be of interest. So really this morning, there's no real news flow of any note. This afternoon, we've got inflation figures for March from the US in the shape of their PPI data. We've got initial jobless claims. We've also got the University of Michigan consumer sentiment data. So decent set of numbers from the US. Also, it's worth noting, just hang on, speakers wise, there's not much to be interested in. It's also worth noting that it is it's obviously Easter weekend. Let me just show you this graphic in terms of how markets are going to play this. So tomorrow markets are closed throughout Europe and the US. However, we do have some US data tomorrow, and we've got their retail sales number. I think we've got CPI data as well. We've got two actually quite important US data releases tomorrow, annoyingly, but markets are shut. We do also have some US data next week on Monday, when again Europe is shut, but actually US markets are open on Monday. The US only have the Friday off for Easter, not the Monday as well. But on Monday we've got I think Empire State Manufacturing is the figure on Monday. So there is some data that's going to happen whilst, generally speaking, other markets are closed. Okay, and then the other thing, and we'll talk about French politics later. We've covered that a hell of a lot in recent briefings. And so, it's just to say, keep your eyes. We're 10 days out. Obviously, keep your eyes on this over the 4-day weekend. We're going to get updates on the polls, and obviously the risk is now is absolutely maybe Macron doesn't even make it into round 2. Maybe it's going to be a round 2, Le Pen, Mélenchon, and if that's the case, you've got extreme right versus extreme left. Both are anti-EU. And then obviously their other policies are opposites, but they do very much have an anti-EU stance. So if those two make it into the final round, well then we've got a very interesting period ahead for French politics, but also for market jitters when you add in the geopolitics, when you add in the Brexit risk, when you add in, well, we'll see. One thing underpinning it all, and perhaps just to finish on why are equities still up here, the only thing that is allowing equities to hang on to these gains that were driven from Trump's election win originally, the only reason is strong economic data. Now, if we start to see a deterioration in data, well, then there really is nothing to keep us up here. So I think economic data certainly becomes really important, alongside obviously the developments on the French election, alongside anything coming out of North Korea today, of course, alongside any further Trump U-turns, and so on. Right, that's it for now, guys. I will leave you as we have this kind of slight risk-off vibe with regards to movements yesterday, with regards to gold new highs for the year, T-notes new highs for the year, dollar weakness off the back of Trump comments. But for now, equities, and I'll just finish with the 60-minute chart of the S&P, just about holding up, but we are edging towards the overnight low. Look for a test of that, which is, of course, the low from back on the 11th, a couple of days ago. Any break below there, and I reckon momentum could pick up quite strongly, because we do have low liquidity here, so you might get exaggerated moves, so keep your eyes. I reckon stocks look a bit vulnerable today. All right, enjoy your weekends, enjoy the session. Thanks a lot.